The stock market is at all-time highs, and popular tech names like Nvidia, Amazon, and even Meta platforms, who was once the forgotten child, have also reached the stratosphere. So what else is there to buy now? Well, you'll be surprised, but quite a handful of stocks are getting destroyed in this seemingly overvalued market today. So for those of you tuning in for the first time, I've had the reputation of catching falling knives after falling knives behind stocks such as Alibaba, Tencent, and Meta platforms, and have since documented my journey on this platform extensively. So my biggest bet on Alibaba has yet to work out for now, but I think I'll count my blessings for the rest. So we have also briefly talked about Amazon, Alphabet, and even TSMC, both as a specific video and also during our portfolio update. But that's in the past. And moving forward, everyone is probably wondering what other opportunities are out here today. And this brings me to the main crux of this video, my next falling knife stock. Interestingly, Roy, who's one of the viewers, commented in one of my other videos, asking me about my opinion on Nike's recent challenges. So the first thing anyone would do when being thrown an idea or even a company's name would be to Google for their share price and ultimately to determine their price action or price pattern. And to no one's surprise, Nike has severely underperformed the index in 2024. At the time of this recording, the S&P is up nearly 18% year to date, while Nike is down more than 30%, and that's a difference of 50%. So I then cheekily replied, so many likes to the comments, and I realized that we all kinda have a certain characteristics. We like to look at stocks getting destroyed, and I sure hope, and I touch wood, that we are not psychopaths at heart. But anyway, I'm focusing more attention on Lulu right now, rather than Nike. So if you haven't guessed it, today's video is about Lululemon. Yes, the one that sells yoga pants. So full disclosure, I do have a vested interest in Lulu, albeit a very small position at roughly 1 to 1.5%. So to sum up Lulu's story in a few sentences, Lululemon is a premier brand in the athleisure space, has focused on product quality and distribution, ensuring end-to-end control and building up communities from the ground up, which converted customers into devoted fans. And due to their sophisticated execution and brand building efforts over the years, the company has grown exponentially and commanded high multiples in the stock market. However, their recent lackluster growth coming out from the biggest market, which is North America, is making investors jittery and wonder if this is another growth story waiting to turn sour. Hey investors, now you can get zero commission plus zero platform fees while trading US options with Webull by performing a minimum of 100 US options trades monthly with reimbursed fees until the end of September. So if you're an options trader, you cannot miss this extremely competitive deal. You can get 1 month of commission-free trading for US stocks and US ETFs, and 3 months of commission-free US options trading when you open a Webull account and successfully meet the relevant trading requirements. So Webull is known for its low trading fees, intuitive interface, and extremely powerful tools. Webull could be your ideal trading platform. Additionally, for those of you who like to get more cash rewards, I've got good news. So Webull is running a deposit promotion where you deposit minimally $2,000 US and complete 3 US buy trades and maintain it until the 31st of August 2024 to get $60 US worth of cash vouchers. On a much higher tier, you can deposit minimally $10,000 US and complete 5 US buy trades and maintain it until the 31st of August 2024 to get $400 US worth of cash vouchers. Moreover, you can get up to 7% of Moneybull interest for up to 90 days with returns up to $1,750 US. So Moneybull is open to all Webull accounts for you to access it easily. Sign up now and grab your rewards. Don't forget to join Webull and unlock commission-free trading today. So let's dive deep into the problem and address the elephant in the room. Why did Lululemon shave off close to $30 billion in market capitalization from its peak? Personally, I believe that there were two main reasons or explanations: growth and macro. First, let's talk about growth, or should I say, the lack thereof. So pre-2024, Lululemon was able to grow their revenue in all regions by double digits easily. In the latest quarter, however, their US business grew by a measly 2% year-on-year, while it made up roughly 61% of their entire overall sales. That said, growth momentum in the international market, especially China, has helped prop up the overall growth rate to just above 10%. Interestingly, I've always thought that the Chinese consumer is always tightening their purse strings. I wonder how are they affording this expensive yoga pants. But when we look under the hood, Lulu's men business actually maintained robust mid-teens growth, but their women segment reported growth in the single digits. And this is concerning, especially when Lulu's main business is to sell yoga pants to women. So the explanation provided during the earnings was that, and I quote, they did not maximize the business in the US, which was a result of insufficient color palettes and leggings assortment, unquote. So they basically went out of stock on their popular colors and size choices. Lulu also expects much of these issues to be addressed in the second half of the year, as well as a lot more newness and innovation to their new product line. So they iterated that they expect full-year revenue growth to be right between 10 to 11%, which is right in line with what they've produced thus far in Q1. And this is a far cry from what they've delivered over the past 3 years. Therefore, many investors are essentially spooked and are questioning whether the Lulu brand has truly lost its magic. Now, when we move on to macro, there are speculations currently around how the US consumer spending is getting squeezed, as US household debt has just reached a record high. In a recessionary environment, it is not hard to fathom the impact it will bring, particularly to consumer discretionary companies like Lululemon, especially when they target the upper middle segment of the consumer class. Furthermore, with Lulu's current premium pricing, customers will easily switch over to their competitors that probably offer the same product for a fraction of the price, particularly so if purse string tightens and people start losing their jobs. I would presume that yoga pants would not be up the priority list. So on the topic of competition, management did say that they are at heightened levels from a few years back, but, and I quote, nothing dramatic in the quarter, unquote. And some might also argue that Lululemon was one of those beneficiaries from the pandemic, and it's time for them to pay their dues, especially in an uncertain macroeconomy. So here's my response to both growth and macro concerns. So first, no one knows for sure how the US economy is going to turn out. I think since 2022, there were many analysts and even economists calling for a US recession, but none has been proven right yet. And I can't invest with this mindset of constantly worrying about the next recession. If not, I'll have to sell most of the stocks that I own today. Second, when we talk about the US market maturing, contrary to popular belief, Canada is actually Lulu's most matured market, but Canada still grew double digits. But there's a caveat here, which is that Canada did have easier comparables to beat in 2023. Third, there is still incredible growth runway ahead for Lulu in the Chinese market. So I've read from one of these research pieces from Abdullah that Nike is 3 times the size of Lulu's North America business, but Nike's China business is 8 times the size of Lululemon. To bring the argument further, Lululemon actually reported 39% in operating margins in China versus 35% in America and 24% in the rest of the world. The Chinese market is one of the most efficient yet. So after all these analysis, here's the bottom line. So Lululemon is in the business of selling clothes, yoga pants to be specific. So that's the tangible part of the business. The intangible part, this idea of brand equity. So Lulu is basically selling a lifestyle, they're selling comfort, they're selling quality, and ultimately, they're selling an identity. And this identity resonates strongly to a particular group, a community of people, and most probably a group in the above average income band. So I understand to many investors, myself included, that this whole brand identity thing comes off as very woo-woo and nothing tangible, and we often can't wrap our heads around it. But the simple way to comprehend this brand equity and the power of this branding is through their pricing power, which translates to their margins. So Lululemon actually has industry-leading margins at 58% gross and 23% operating, while Nike on the other hand, which is an international brand, has only 44% gross and 12% operating. So you could argue that Nike sells a wider array of products, therefore becoming less efficient and having a smaller margin. But on that same note, I can argue that Lululemon is really just selling thin pieces of clothes, and yet their customers are willing to pay a fortune for it, allowing them to have operation margins almost double that of Nike. And the cherry on top of the cake, Lululemon actually enjoys return on invested capital of between 30 to 40% since 2016. And I'm just going to quickly insert some of the photos that I took in the Singapore outlet. And as far as I'm concerned, I've visited all of its outlets in Singapore and it's as packed as ever. So I guess the Lululemon community in Singapore is eating up all these triple-digit sports bra and yoga pants. You be the judge. But make no mistake, I completely agree that in a recessionary period, this whole brand identity thing can be thrown out the window as people pull back their spending. So we are talking about premium products here, not necessarily luxury products like Ferrari, with customers being completely price inelastic. Therefore, I can understand why investors are the first to sell out of investments like Lululemon the moment they post slowing growth rates. It can ultimately only mean one of two things. Either the economy is going to go down from here and everyone stops patronizing premium players like Lulu, or Lulu is losing its brand equity and people are no longer buying up this brand association. Either way, it's going to be very bad for Lululemon. Now, just a short interruption. I'll need your help and your opinions are greatly appreciated. So do help me fill out a survey in the link below so that I can know more about you and what topics you'd like to see me cover in the near future. So if you do complete the survey by the end of July, I'll reach out to 3 random participants with coffee via an e-gift. Thank you in advance. So this tweet from Eugene has shed more light about Lululemon's current market position, and they've uniquely gained market share from all other players in the North America market. Of course, these are backward-looking data, and we don't know for sure if 2024 would be the year that Lulu's brand starts eroding from here. But I'll take these odds. Also, Lululemon is largely a B2C business, not a large wholesaler or distributor network like Nike or even Adidas. So its working capital requirements differ, profit margins are higher, it can control its brand, product range, pricing, and data access of its customers. At least based on Lulu's current trajectory, I'm liking this business quite a bit. And if you were to look at the relative valuation of Lulu today compared to its history, regardless from a price to earnings, price to sales, price to free cash flow basis, they are trading near their historical lows for obvious reasons that I've outlined previously. So if you use the rear view mirror to look at Lulu's past financials, I can tell you that it's a no-brainer, generating high growth rates with industry-leading margins and also a decent valuation. It's a perfect investment. However, a large part of Lulu's recovery thesis hinges on whether they are able to recover from their missteps in the first half of 2024 and whether they can revive growth rates in their biggest market. And more importantly, to expand their international market to extend the runway. So if they're not able to do that, then I believe that these phenomenal numbers that we have seen over the last 3 years will be a thing of the past. So the market is front-running this poor performance and expectations of Lulu's growth coming in softer than expected. So I'm in the camp of let's monitor, wait and see how it goes. And I would like to add more to my Lulu position as long as I deem the Lulu brand to stay whole and stay intact, but are sold down for reasons that they cannot control. However, if there are more data points floating to the top suggesting that Lulu is basically losing their brand appeal and die-hard fans are slowly switching over to their competitors for whatever reasons, then I would exit my position entirely. With that, I look forward to your discussion in the comments below, and I'll see you in the next video, but more importantly and hopefully, I'll see you guys on the moon. Goodbye!